Elliot, how many startups have you done? Give me the full history.
I've truly done 9 startups. For me, what constitutes doing a startup would mean creating revenue with 9 ideas. Before I was in startups, I was actually in commercial real estate, syndicating deals for student housing in tertiary markets. So I had my own shop. I had a few folks that I worked with, fortuitous in the timing because this was the 2000s when there was just a tremendous amount of velocity within the commercial real estate space. We took a lot of that coastal money where folks were trading out of really high dollar assets and put it into stabilized cash flowing assets in the Midwest. So this is like 2005, 2006. And interestingly, I had some money put away. I had the latitude to take some risks. And my first real foray into technology startups was over cocktails with our CEO and founder, Will Schroeder. So we're outside, which we typically did. We used to go meet up at a steak place and we used to sit outside. And he was talking about his little brother. His little brother was a chef, still is a chef, but his little brother basically had no credit. Will said, hey, wouldn't it be cool if my brother could buy things online using some type of weekly payment mechanism, given the fact that his cash flow comes in and it's fairly lumpy? Of course, the first thing you say is, well, how about a credit card? Will's like, his credit card limit would be like $200, even in the freewheeling credit card days. I remember going home and thinking, wow, that's a really interesting concept. And one thing you learn to do well in commercial real estate is diligence, evaluating so many components when you're looking at a property, right? Everything from the economic development around the property, underwriting the bricks and sticks. The one thing I could do is I was really good at diligence. So I went home and I spent a couple of days kind of looking into the size of the opportunity and the validity of the opportunity, and stumbled across a few tangential competitors, but nothing really that was in the market. So I go back to Will and I was like, this is really interesting. He's like, do you want to do it? What do you mean, do I want to do it? He's like, do you want to do this company with me? And I was like, that's how it works in this bizarre world of startup. And he's like, yeah. So we end up starting a company called Afford It. I kind of took the operations role, taking this incredibly broad idea and understanding how do we build a business around this, because it was complicated, right? High risk consumer finance. You had to understand the legality of what you can and can't do online. Really, what took this thing from 0 to 1,000 was we both had some money, and we didn't really have any logistics set up, right? So we didn't have suppliers yet. I was talking to suppliers. We didn't have debt to underwrite these deals, but we just said, let's figure out what the market demand really looks like. We end up going through and buying cost per click ads on Google at the time, saying basically Nintendo, it was the Nintendo Wii PlayStation era, Nintendo Wiis for as little as $25 a month. You can only imagine how that went, right? So December of that year, we did $567,000 in sales.
Holy.
Now here's the problem. What that means is Will and I have to front all that money, have to go pillage every Best Buy in the area. In all these adventures, you find like the needle in the haystack around how do you actually create the economic components or the regulation around this. And we found the guy in Texas who wrote the law for the retail installment sales contract. And then again, through the path, we brought on the old CFO of Aaron Rents as one of our advisors. Then we go find the head of underwriting at a company called Fingerhut. So we put a lot of smart people around the table. So we knew that we had a good mechanism to sell this stuff. The problem was we had no idea if people were going to pay us back. By the way, they didn't. And we didn't have the capital stack to be able to support this thing at scale. So at the time, Will goes out to California. He was living out there for another company called Gotcast. He soft pitches this idea to a guy. I think the first guy he soft pitched to was either Marc Suster or Mike Jones. Mike was the CEO of MySpace at the time. And Marc was at GRP. He was pretty new to it. And they both loved the concept. So we were able to rapidly raise a seed round from some kick-ass investors. Crosscut Ventures, Marc put in, Mike put in, a guy named Cameron Johnny put in, Bessemer put in. So now we had some scratch and we had some backing. And it was funny. I'll take a quick right turn. Within the pitch, when we went, to Palo Alto and did the classic Sandhill Row frenzy, the one thing that the partners couldn't get around was the fact that there were so many people in the United States that were unbankable, right? And I had the support, right? I did the diligence. I had, the Experian, the TransUnion, all of these different substantial reports to show, look, 40 million people can't get real credit, but a lot of people want to buy things online. And there was clearly a trajectory on e-commerce. The demand within the market at a macro sense made a tremendous amount of sense. So this is a good hero to zero story. And it's important. And it taught me a lot. We're flying high at this point. We've got the right people in the deal. We have the right investors in the deal. Founders Fund came in, right? And Founders is Peter Thiel's company.
How much did you raise total?
It was 7 figures, not 8.
Okay.
But again, this was my first time really doing this. And all of the advice from the VCs was really around push top line, push top line, push top line, which wasn't hard because think about our ads. We didn't understand what repayment was going to look like. We didn't really understand the economics. We knew it was a 1.7 time retail cost. So there was a lot we knew. But we came into this class, kind of this Groupon, Progresso Financial, all these alternative fintech or e-com companies were the flavor of the year, really, in Silicon Valley. We were getting every meeting and every intro possible because people saw this is hit the B button, as they say. It's $1 billion opportunity or more. So we're out continuing to grow this business, but with a business like this, the capital needs are outlandish. So we go and we negotiate. I'll always remember this. We negotiate basically a Series A term sheet at a rooftop bar in Santa Monica with Austin Ventures, who it doesn't exist anymore, but it used to be, they used to have like $1 billion assets under management. Well, in our high-fiving, we're on the venture path. We're going to build something massive. That summer, legislation creates this consumer protection agency. And that consumer protection agency was really to protect against the buy here, finance here, auto dealers, some of the predatory loans that were out there. While we weren't kind of in the bubble, we were right outside the bubble. The timing is so insane. Like all of this starts to happen and come to pass when Will and I are about to go back out to Silicon Valley and we're going to shop this term sheet, right? We're going to shop it because we feel like there's more value out there. So all these meetings are already booked. I think we had like 60 partner meetings, something outlandish. And effectively, Austin rescinds their term sheet. They're like, look, you guys have a scarlet letter now. Like, yes, this is really exciting, but what happens if there's another step of regulation and you literally can't conduct your business anymore? So here we go out to Silicon Valley to all these partner meetings that had already got wind of everything that was going on. And we got our fucking teeth kicked in, right? We went from, buying yachts in our mind to, again, this scarlet letter of what felt like a predatory business. The irony is one of the PayPal Mafia folks, and Founders Fund was all PayPal Mafia, ends up starting a firm years later and grows it to be a multi-billion-dollar business with damn near the same model. Now, it just shows the importance of timing, and certainly being, one of the PayPal founders didn't hurt. It was an educational 2 years filled with an appropriate level of hubris, because ultimately we didn't raise the dough and we kept, kind of trying to scramble to put money together and eventually folded the tents. I think we were in the process of raising money and we hadn't figured out the model at this point, right? We didn't have the retail installment sales contract. And Will and our CTO were driving through a snowstorm up to Canada, I think to meet with an investor. And we're getting on the phone with Will while he's driving up there. I'm like, dude, we don't have a fucking plan. We're just fucking driving headlong into the abyss here. What's going on? And he's like, Elliot, this is the process. And I was like, what do you mean this is the process? It's like, this is the process, right? We're just going to keep pushing this hypothesis and keep learning and keep pushing. And eventually we're either going to find that this is impossible or we're going to find that it's incredibly possible, right? Sometimes it's in between. And then we stumble upon a company called, I think it was Cubis, that led us to Texas, that led us to this guy, and ultimately the retail installment sales contract. It was a fast education, right? Because so many other career paths where you're not trying to create something out of nothing are fairly linear. You grow and there's a process, whereas building a startup is, here's a North Star hypothesis and let's figure out how to make it work and see if strangers care about it. And there's a really good lesson that I continue to impart on founders around early demand that we can get into here in a little bit. But that was really the first foray. From there, I did several other companies with Will and a couple other companies with other folks, varying levels of success. But I was hooked, right? I loved this concept that you could go from a whiteboard to a business in 6 months if you were willing to put the work in and willing to have kind of that grit and that fortitude.
You got the taste. It's in your blood. You cannot not do it. That's one of the hallmarks of serial founders, right?
Absolutely. And I've seen the taste go two ways, right? I've seen people work in a startup environment and they quickly go back to Big Co because that's more suitable for them. If you love to learn and you love to create, there's no better canvas, so to speak, than building a startup.
What in your mind is the difference?